this point, midway through the year, the overall picture for stocks and bonds has been relatively favorable for investors. Mike Taggart of Nuveen is here with us to share his view of the closed-end fund market. Mike, how are closed-end funds doing, and what's the outlook for the rest of the year?
So far, 2017 has been a really good year for closed-end funds. Most of the segments have positive NAV returns, positive price returns. I mean, there are a few exceptions, one of them being the MLP C-Core segment, which is down about double digits on average. And that just has to do with weakness in its segment, and in the underlying assets. So.
What potential areas of opportunity appear on your radar screen?
Well, with closed-end funds, I think there are always areas of opportunity depending on what opportunity investors are looking for. So, for instance, if you are looking for tax-exempt income, there are still quite a few closed-end funds that are offering around 6% tax-exempt yield, and that's before you do a tax equivalency. And in the taxable bond space, there are funds that are trading at wide discounts and offering distribution yields of about, around 9%. The MLP Corp sector, they're offering distribution yields from 9 to say 12%.
Do you anticipate that discounts will continue to narrow, and how may that affect the closed-end fund market if they do?
So far in 2017, discounts have pretty much, I'd say, gone sideways overall for closed-end funds. I mean, right now they're at about their 10-year average, which is about a minus 4.5% discount overall. It's my long-standing view that discounts and premiums are kind of, investors make too much of them when it comes to closed-end fund investing.
What are your parting suggestions for closed-end fund investors?
So I think, as always, closed-end fund investors, my view is that they should invest, for the long term, and that, find a fund that fits into your portfolio, meets your investment objectives, with a good manager, good long-term track record, and if you happen to find it at a decent discount, decent valuation, all the better.